Billions vanished. Investors panicked. The so-called crypto king, gone. This is the true story of the man who lost $40 billion overnight, a crash so fast it felt like the blockchain shattered. His name was Do Kwon, a Stanford-educated South Korean entrepreneur with a taste for confidence and confrontation. In the eyes of his followers, he wasn't just a founder. He was a visionary. The man behind Terra and its algorithmic stablecoin, UST, Do Kwon, branded himself as the future of decentralized finance. By 2021, he was appearing on major podcasts, tweeting with arrogance, and mocking critics who questioned his vision. One tweet simply said, "I don't debate the poor." He promised to build a currency that could replace fiat money, one that didn't rely on banks, governments, or traditional reserves. And the market believed him. Terra's native token, Luna, soared. UST was hailed as a breakthrough. At its peak, Do Kwon's empire was worth over $40 billion, with millions of users and major crypto players backing him. He became a regular figure at blockchain events, wearing a hoodie, a smirk, and the aura of a tech disruptor. But beneath the fame and followers, few realized how fragile his empire truly was. Terra's foundation wasn't built on trust. It was built on a promise that would soon crash in the most public, catastrophic way possible. And in order for it to crash, it had to climb. And here's how it reached $40 billion. Do Kwon's empire was built on two core innovations: Terra's Luna and UST, an algorithmic stablecoin. Unlike traditional stablecoins like USDT, which are backed by cash reserves, UST relied on code, minting, and burning Luna to maintain its $1 peg. It was a delicate dance of supply and demand, controlled entirely by software, and it worked until it didn't. To fuel adoption, Kwon launched Anchor Protocol, offering a jaw-dropping 20% annual yield on UST deposits. It was crypto's version of a savings account, except it promised 10 times the interest of any bank. Investors poured in. By early 2022, UST had a market cap of over $18 billion, and Luna was trading at over $116 per coin. Mainstream crypto influencers backed it. VC firms bought in. Kwon's following grew cult-like, with Twitter defenders branding critics as ignorant or jealous. Terra wasn't just another blockchain. It was becoming a belief system. By April 2022, Terra's ecosystem supported over 100 decentralized apps, and Kwon's net worth soared past $10 billion personally. But as the hype blinded everyone, a single truth remained buried. Algorithmic stability wasn't stable, and when the market finally tested it, the collapse would be biblical. But as the numbers kept climbing, tiny fractures were also starting to form. On the surface, Terra was booming, but behind the charts and headlines, cracks were forming, and some people noticed. Developers inside the ecosystem raised quiet concerns about UST's long-term stability. The 20% yield Anchor offered was unsustainable without constant inflows. Critics questioned how long that faucet could run before running dry. Twitter threads began popping up. Analysts warned that UST had no real reserves, only the algorithm and faith in Luna. Still, Kwon dismissed them publicly, often mocking doubters. One of his most infamous tweets came in response to warnings of collapse. "I'm honestly kind of enjoying this, watching you all still poor." But markets don't run on ego. In early May 2022, a major wallet began selling off large amounts of UST. Panic spread. UST started to lose its peg, dropping to 98 cents, then 91 cents. Traders rushed to swap their UST, but the system couldn't handle the stress. Anchor's yield reserves were rapidly depleting as the algorithmic mechanism designed to stabilize UST began to spiral. Luna was minted in massive quantities to save the peg, but that only diluted its value. And just like that, the confidence began to crack. The collapse wasn't days away, it was hours. And then, like a glitch in the matrix, it all shattered like glass. On May 9th, 2022, UST dropped to 74 cents. By morning, it was trading below 30 cents. Investors who believed they were holding digital dollars woke up to find their savings in free fall. Terra's algorithm kicked into overdrive, minting billions of Luna tokens in a desperate attempt to restore UST's peg. But the more it printed, the worse it got. By the second day, $40 billion in combined market value had vanished. Luna fell from $116 to fractions of a cent. Wallets froze. Exchanges halted trading. Anchor Protocol's reserves, once marketed as the safest place in DeFi, were drained dry. Reddit threads exploded, and live streams of traders refreshing charts showed disbelief, despair, and sometimes tears. Some users reported losing their entire life savings. One popular post simply read, "My daughter's college fund is gone." Meanwhile, Do Kwon tweeted, "I am heartbroken about the pain my invention has brought." But for many, that was too little, too late. Terra was in free fall, and exchanges began delisting the coin. Memes flooded Twitter as angry investors called for jail time. It wasn't way more than a crypto crash. It was one of the largest wealth vaporization events in internet history. And as billions vanished, one question echoed louder than any headline. Where's Do Kwon? Hit that like button if you want to keep digging into stories that most platforms won't even touch. In the chaos that followed, Do Kwon went silent. As investors demanded answers, South Korean authorities began investigating. By September 2022, an arrest warrant was issued, charging him with fraud and violations of capital market laws. But Do Kwon had already vanished. For months, he moved in secrecy, reportedly passing through Serbia, Dubai, and other countries with no extradition treaties. Interpol issued a red notice, making him one of the most wanted fugitives in crypto history. In March 2023, he was finally arrested in Montenegro with falsified travel documents while trying to board a flight to Dubai. Meanwhile, the human toll of the collapse deepened. Over 200,000 investors were affected. Small business owners, retirees, students, many had trusted the Terra ecosystem with their savings. Entire communities on Reddit and Telegram were flooded with regret, anger, and in some cases, suicidal posts. Trust in DeFi took a massive hit, and regulatory pressure tightened around crypto globally. Terra employees faced intense scrutiny. Some disappeared from public view. Others were interrogated. The project's collapse wasn't just financial, it was spiritual. A movement built on decentralized freedom had turned into one of the largest financial betrayals of the internet age. But even with Do Kwon behind bars, one mystery still haunts the blockchain. To this day, no one knows exactly where all the money went. Blockchain analysts have traced billions through shell wallets, mixers, and obscure exchanges, but large sums remain unaccounted for. Some believe Do Kwon moved the funds long before the collapse. Others think insiders siphoned liquidity while the world watched Luna crumble. Despite his arrest, Kwon hasn't revealed the full truth. In interviews, he's expressed regret, but denied intentional fraud. He still claims Terra was a flawed idea, not a scam. Yet key decisions like propping up Anchor's yield, mocking critics, and shifting company assets suggest deeper intent. And then there's the comeback theory. In early 2023, Kwon hinted at a new blockchain project. He still has supporters, loyalists who believe he can rebuild. But for the rest of the crypto world, his name is radioactive. The courts may decide his fate, but the blockchain doesn't forget, and especially the people who lost everything. Do you think this was just a failed experiment or an elaborate setup from the start? Let us know in the comments.